All we have to do is follow the faucet of water and see what buckets it drops into, and then we can invest in those buckets. Welcome to 2025 and to my video. We're here. I'm not just excited for 2025. I hope the year is treating you well. We're only a couple weeks in, but I'm excited for 2025, 26, 27, 28, 29, 2030. I think the next 5 years is going to be a seismic shift in not just tech, but it's going to trickle down into our everyday lives. And I'm a power user at this point of all AI tools. My Tesla self-driving, I can't imagine how much better all this stuff is going to get. And we're in the early innings. But I'm going to talk about the data center gold rush, which is powering all this, and the opportunities. We're going to talk about like probably 12 stocks today that I've done 20 to 35 hours of research on. And I'm going to try to give you the best high level overview. Now let's really quick reflect. But I've been mostly in crypto for the last 7 years. In the last 2 years, I've actually done really well in the stock market. So reflecting on my 2024 stock market journey, as you can see, I started the year at around $79,000 in stocks. And I ended it at around $250,000. So I did really well. And I have the one thing that did carry my portfolio was my conviction in Tesla and buying the dip. So I started accumulating Tesla. And you can see at the end of 2024, I was up $100,000 on my Tesla position. And that was just carrying my portfolio along with Robinhood and some other, great plays I made. But yeah, I did really well in 2024 in stocks and also in crypto. This video is not about crypto. So let's talk about the data center gold rush, because I'm only getting more and more excited as each passing day goes on. So I'm going to talk about this one stock that I recently started buying that I think is a great setup opportunity. And but before we get to that, the theme of this video, if you haven't noticed by now, is the data center gold rush. Now, everything, all these AI application layers, whether it's ChatGPT, whether it's Tesla self-driving, whatever it is, it lives in a data center. Like that's like the root of all of these applications, all this AI training, everything starts there. So if you extrapolate that, there's probably like 12 to 50 different companies that provide their products or services that live inside that data center. And I'm going to show you which ones they are so you can grab a piece of them, because the spending is about to get crazy. If you thought 2023 or 24 was an AI bubble, I'm not going to lie. 2023, I thought there was an AI bubble. And a lot of companies did, have crazy, stupid valuations, but a lot of them cooled down. But the more I researched it, the more I realized we're just getting started. And I'll show you why. So the AI race is 20 times bigger than the space race. And I think it could be even more. I don't know. But the amount of spending that these big companies, so like the hyperscalers, as they call them, Microsoft, Google, Meta, Amazon, Tesla, the amount of money they're spending on not just data centers, but GPUs, that's like the main cost for most of them, right? But it's in the tens of billions already per company. So in 2023, Microsoft spent 40 billion on AI stuff, right? Whether it's GPUs and chips, whether it's training, research and development, inference. Google spent another 30, Meta spent 23, Amazon 16, and this is just 4 companies, right? Now, this slide is probably low-key might like blow your mind. So remember the space race? I mean, I wasn't live, but we all know about it, right? America versus Russia, who can get a man on the moon first? So a lot of people say that bankrupt Russia at the time because, so much money was spent going back and forth, but the US alone spent over 300 billion, around 300 billion inflation adjusted, in the 13 years of that space race from 1960 to 1973, 300 billion, remember that number. Now let's move on to the AI arms race. In 2024 alone, just 1 year, 365 days, an estimated $224 billion was spent on AI related hardware, software, etc. That is insane. That is almost the same amount as the 13-year space race in 1 year. So imagine what the next 5 to 10 years are going to look like. I'm sure it's going to blow everybody's estimates out the water. But let's look a little deeper. So I was digging in my 35 hours prior to this video of research. I was digging through I believe this is Digital Realty. It's a rate, digital real estate investment trust for data centers specifically, right? So they own, construct, and lease data centers to all these companies. They just had in 2024, their Q3 was a record-breaking quarter for historical booking. So it was more than double their previous record. The writing's on the wall. This is a big red flashing sign saying the demand for data centers, which is like the root of all the AI stuff, is literally through the roof. You can see the big green arrow pointing to the Q3 bookings for data center leases. It is insane. So I don't see a steady climb up. I just see the beginning of something, right? And that something is the AI arms race taking place and data centers being at the heart of that. So screenshot this picture if you want. This is the majority of the stocks that we're going to cover today. And I'm going to try to go not too deep into each one because there's a lot, right? But get out those notes, pull up your Robinhood, and let's get into it. So by the way, the reason I put this image together is because money spent, right? So when you see Microsoft in this tweet up here saying they're going to spend, Microsoft is to spend 80 billion on AI data centers in 2025. That money spent is money earned on the other side. So who's earning that money, right? It trickles down somewhere. So all we have to do is follow the faucet of water and see what buckets it drops into. And then we can invest in those buckets, right? That's how I look at it. So money spent is money earned, and we just got to track the flow. Before I move on, if you want access to all my research, crazy research that I go into, just like the one you're watching right now, you can get access to my entire Big Ideas vault. It's like hidden gems almost. So that's kind of what I enjoy doing. Also, you get access to my kick-ass community, 444 Capital Club. I love everybody in there. Try us out for a month. If you don't like it, no hard feelings, but I got a feeling that you're going to want to stick around because it's just amazing. That's all I'm going to say. Now let's move on to our list. Number one, we have the monopolies of AI infrastructure. So first I'm gonna start with the top two, Cadence and Synopsys. These are, think of them like, we all know NVIDIA is like the hardware leader, right? In GPUs, et cetera. But NVIDIA and every other semiconductor maker that makes these chips, makes these GPUs, they need to use one of these two companies in the chip making process. And these companies aren't hardware, they're software. So they are the key software in creating and designing the chips that everybody is creating, right? And the chips are like the hottest thing right now. The reason like Cadence and Synopsys, I think their retention rate for customers, right? Whether it's NVIDIA or it's whoever is AMD, whoever's using or creating chips and using either Cadence or Synopsys software, they don't have any other choice. The retention rate is 100%, which is unheard of for software, right? So that means their clients are not going anywhere. Why? Because there's nowhere else they could go. That's why they're in the monopolies umbrella of the AI infrastructure, Cadence and Synopsys. Next up, we have ASML, which is a monopoly on its own, basically. It's a beautiful, beautiful monopoly. It's a Dutch company. They basically have these, and you can Google it too, it's crazy. They have these huge machines that are like $200 to $300 million a piece per machine. And I think I read somewhere that if you get 20 engineers in one room and 20 engineers focusing on one machine, they wouldn't be able to figure out how it works just because everybody's so specialized into the one aspect of the machine. So it's just, yeah, think of it like a super fancy complex lithography machine. That's what it's called. And I'm not gonna lie, I don't understand like exactly like what the lithography and the EUV light is doing to create the chips. But all I know is that everybody needs an ASML machine to create the chip. So that is why they are a monopoly of AI infrastructure as well. That's why they're in this umbrella. And then I'm sure you've heard of Taiwan Semiconductor. They are one of the key players as well in the hardware industry. And honestly, like if any of these companies were to come to a pause, a halt in their business, something were to make them slow down, that would create a bottleneck for the entire industry. Like everything will come to a screeching halt almost. That's how important these four are. So I would say these are pretty safe bets if you're jumping into if you want exposure to the AI arms race. These are the literal safe bets. Not saying they have huge upside, they're already fairly big, but yeah, monopolies tend to be good picks. So next up, we have the real estate of AI infrastructure. So we're talking about data centers, right? And data centers are physical. They're not software. They're physical big buildings that require a lot of space. And these two are REITs, real estate investment trusts, that construct, build, own, lease all these data centers to all the big players, multiple different countries, continents. And their focus is specifically, it's not on storage units, it's not on residential housing, it's on data centers, which I really like because a lot of money is being spent there. And actually, that one report I showed you with the record bookings was the earnings report from Digital Realty right here on the right. So they're both huge players, over 240 to 300 plus data centers each. Equinix is in over 26 countries, so global presence, I'm pretty sure, for both companies. And I think from my research, Digital Realty has a better looking fundamental setup in terms of like their earnings. Like you saw, let me pull it back up. You saw their bookings just going crazy, right? Their data center bookings are going crazy. I think they have no debt. I'll pull it up later, but Equinix, I don't know if I'm saying that right, and Digital Realty are the two real estate plays of AI infrastructure because they're leasing out, renting out, and building all these actual data centers, like the real estate part of it. But then within those data centers, right, you have a lot of moving parts, and that means a lot of different companies are selling products and services to these data centers because they're required, right? So first you have a lot of power. Like I'm sure you've heard the amount of energy consumption that all these GPUs consume is off the charts, like quite literally off the charts. So you're going to need power systems, right? You're going to need backup generators. I assume every data center needs backup generators. Like that's not an option because if you have something go down and you have a million or hundreds of millions or billions of clients like Meta or any of the other players, you need uptime, right? Uptime is the most important thing to your business. So backup generators, power systems, power control, these are the players. I think from this group right here, Powell is probably the most fundamentally impressive because they kind of have two forks in the road, and they're diversified because not only do they provide power systems to data centers, it's not the majority of their business, but I think the majority of their business comes from their converting natural gas to oil. So the benefit they have is the Trump administration is going in, and we all heard Trump say frack, frack, frack a million times, and how he wants to bring oil back to be made and harnessed in the U.S. So Powell also has that going for the Trump administration going for. So again, next 4 to 5 years, I think it's in a very good position. It's one of those unique companies that's in a really good position to do really well. And then with all that power, right, if any of you have owned a computer, laptop, you know how overheated it can get if you're like playing a game or doing something more intense. Now imagine tens of thousands or even 100,000 of those supercomputers, how hot that data center will get inside, right? So cooling systems, again, not an option, requirement for every data center. They need to have some type of cooling system. So the 3 players that I pulled up are Modine, Vertiv, and Comfort Systems USA. And they provide from liquid cooling to air cooling, all types of different solutions. And they're also catching a bid from the data center craze, boom, whatever you want to call it. Moving on, let's go to the networks part. Right? So again, another vital thing that is not an option, but a requirement is to have fast networks in the data centers, right? You need information to go in as fast as possible, go out as fast as possible. And the 2 players that I've pulled up are Cisco and Arista. But I don't know if I will touch Cisco because Arista seems like the underdog that is coming for Cisco's launch. So in the chart I have pulled up here, you can see that Arista in market share in dollars has recently surpassed, in the first half of 24, surpassed Cisco. And not just in their market share in dollars, but their market share in ports, the number of ports. So Arista is definitely, I think the ticker is ANET. And they are definitely, to me, that they look like the much better choice, the much better pick if you had to pick from these 2. Cisco's that legacy one that is kind of, I don't want to say fading away, but I mean, this chart kind of says it, right? If Arista is gaining that much market share and overtaking it, maybe Cisco is fading away and Arista is kind of like a new up and coming player to bet on. All right. So really quick, I want to go over just these companies because I talked a lot about them. So let's go over the monopolies, right? The 4 monopolies. I have their charts pulled up. And I'm not a chart guy, right? I don't really believe in that stuff, but let's look at the fundamentals. So over the 5 years, right, ASML, the big machines, the lithography machines that I was talking about, hundreds of millions of dollars each, they haven't done that bad. Over the last 5 years, 146%. The last year has been kind of flat, but that's because I think all the AI stocks cooled off, which is a good thing, right? We don't like super high valuations. We like growth, but we don't like artificially boosted growth just by hype. But don't get it twisted. Like, I don't know about the hype, but the fundamentals are definitely here. So it is a 293 billion market cap ASML at the time of this recording. Price to earnings 38, and their revenue is increasing slightly but consistently over the last 5 years. And if we go to the more recent quarters, 2024, it looks like the margins are recovering. Debt, not too bad. But end of the day, like, you need ASML if you're in the semiconductor business, if you're making designing chips. There's no way around it. So again, like I said, don't expect crazy upside, but I think this is a safe bet over the next 5 years. Then we have Cadence, which is one of the 2 software monopolies, right? Everybody needs Cadence or Synopsys. Like, there's no way around it. Last 5 years, amazing, 300% growth. And if we go down, their market cap is 82 billion, so decent valuation there. And if we zoom out to their annual earnings, again, slow, consistent grind up with great margins and amazing, predictable, recurring revenue. That's the most important thing for both Synopsys and Cadence. So let's switch over to their competitor in the duopoly that they have, Synopsys. So last 5 years, they've also done just as amazing, almost 228% up. Their market cap is 76 billion. Again, it's up there. And their annual revenue is slowly, steadily climbing up. They actually had great margins in 2024. And their debt levels actually amazing here. So again, they just have predictable recurring revenue from clients that are not going anywhere because they simply can't. So these 2, again, another safe bet. Then we have Taiwan Semiconductor, another amazing up-only stock because of its vital key role in the semiconductor industry. It's nearing $1 trillion market cap. It's at 866 billion. And let's take a look. Again, another slow grind up because I just don't see it going anywhere. Any of these 4 really going away anywhere. So they're going to slowly grind up. From these 4, like I mentioned 100 times, don't expect crazy upside, but expect gradual up into the right climb for the next 5 to 10 years. Almost guaranteed, in my opinion, NFA. And then let's look at ANET, that network stock that I told you that is overtaking Cisco, right? We just talked about it, Arista Networks. And let's have a look at that. So the last 5 years have been amazing, like disgustingly amazing. Almost up 800% in the last 5 years, which is, and 82% in the last 1 year, right? So this is growing, and the price to earnings isn't that crazy. So, sorry, just got distracted for a second. They have like no debt. Amazing. I love when companies have no debt when they don't need it. And it's a slow, actually, I wouldn't call this slow. They're picking up steam like really fast, right? So again, they're overtaking Cisco. That means they have to be growing. That's why I like this stock, because market cap 144 billion, but they're like in that growth stock phase where they're overtaking a legacy leader, Cisco. No debt. Yeah, I think it's beautiful fundamentals. You know, you still should do your research, dig into the earnings, etc., but I like it. And then let's go into Powell, which is the energy stock that again has a segment for data centers, but also has that Trump administration benefit where, you know, they convert natural gas to oil. So we know those stocks are going to be good the next 4 years during Trump's presidency, right? So they have like a double-edged sword of an advantage. And I like them. Again, 5 years, 5 year returns, 385%, 1 year, 188%. Solid. The market cap is only 2.7 billion, right? That's amazing. And the price to earnings, really good, 18.67. And let's look at their annual growth. So this is, yeah, I wouldn't call this slow either. They're picking up steam pretty fast. Zero debt. Again, I love a company with zero debt. And it's still relatively small, $2.7 billion company. So there could definitely be something there. Again, do your own research, dig into their earnings reports and see how big the segment of data centers is, because I think that is going to give them unexpected, or it's already giving them unexpected boosted revenue, right? Aside from their, you know, core business. What else do we want to see? I had, I think, one more stock that I wanted to cover. So Equinix, oh yeah, Digital Realty. So these are the real estate ones, right? The ones that, like, you got to lease a data center from someone, right? So it's Digital Realty, what was the ticker? Digital Realty, DLR. DLR is the ticker. So last 5 years haven't been amazing, 45%. But I feel like with the record quarter they just posted, that could be like the writing on the wall, like data centers, demand for leases for data centers is about to go crazy. So if you want to take that bet, the all-time chart looks really good. Last 20 years. If you want to take that bet of betting on the real estate aspect of the data center boom, then this could be a good one. Let's see. So $60 billion valuation, price to earnings is pretty high, but they have a big backlog of orders, and they're building. So I don't know. I didn't do a crazy amount of research into this one specifically. They have like a steady climb. You'll probably have to do your research on this one. I'm not sure. Let's check their competitor, Equinix. So it's the two big real estate players for data centers, Equinix and Digital Realty. Last 5 years, slow grind, but they also pay dividends. So this one pays 1.79. Let's go back because I forgot to check the dividend on that one. 2.7%. So you're enjoying cash flow in the meantime, which is never a bad thing, right? So if you end up holding this and if you're in it with size, you get a kickback. You get a 2.7% annual dividend, which is not amazing, but it's a good kicker for holding a stock. So let's go back to the competitor again. Equinix. The ticker is EQIX. Market cap 91 billion. It's up there. Price to earnings 84. No, not too great. Again, a slow, steady climb. You know, nothing to write home about. So I would actually, I would probably do your research between these two and pick which one. Or if you want to hedge and pick both of them up, that's your call. So we did like a little quick fire round of those. Now, the next thing that I'm going to touch on. So I'm not going to leave you guys hanging. In the beginning, I told you I started buying a stock recently in this space. And so literally like a week or two ago, I started accumulating the stock. And it's an amazing narrative, which I love setups like this. So I was listening to a podcast, and Gavin Baker, super smart VC AI tech guy, really quickly said or mentioned that HBM memory is sold out for the next 2 years. Everybody on the pod like brushed it off, but to me that sounded super interesting. So I was like, all right, time to do a deep dive. So I did like hours and hours of research, listening to more podcasts, just really diving in. And high bandwidth memory is in fact sold out for the next like 2 calendar years, which is insane. So I'm like, okay, which companies, right? Which companies are in HBM? I have to know. And that led me to Micron. Micron is, and the ticker is MU. So let me give you a quick overview. Again, I'm going to make a whole entire video of the bull case for Micron, which is basically my research that led me to say, hey, I'm going to start accumulating the stock and my price targets, all that good stuff. Okay, I guess I should probably mention what HBM is. So imagine that I heard this analogy in an article I was reading. So imagine if a GPU or the card, the computer, whatever you want to call it, is like a kitchen, right? If the chef has to walk 40, it's like a huge kitchen. And if the chef has to walk 40 feet to the closest oven and then 40 feet to the closest sink or whatever, right? The food is going to get prepared really slow compared to like somebody that's like super close to the oven, super close to the sink and everything they need, right? So what HBM is doing, saying, hey, let's bring, not only we're going to make the ovens bigger, wider, so more food can fit inside, more food can be, cooked more quickly. We're going to stack them on top of each other and we're going to bring them as close as possible to the chef. So maybe he doesn't even have to move. The actual efficiency of the chef is going to go up like crazy, right? Because now the hardware makers like NVIDIA are in the game of let's make everything as efficient as possible. So I feel like for whatever reason, that's basically HBM. It's like, think of it like a huge mega highway with like 100 lanes that allows more cars to flow through, right? Instead of like a tight street. So HBM, high bandwidth memory, that's kind of like a high level overview for you guys. But a couple of days ago, Jensen at the CES keynote in Vegas announced the NVIDIA Blackwell chip. And he mentioned like one of the only companies that during like the presentation for the chip that he mentioned was Micron. He said memory provided by Micron. And actually I was watching it live and I pulled up Robinhood. It was like 9 p.m. and Micron stock went up like 7% at one point overnight trading. I was like, wow, did nobody know this? Because like I did my research like not that long before the actual keynote and I already was aware of this. But apparently, I'm guessing retail like didn't know, retail traders, I'm not sure. But now you know as well that Micron's HBM chips are going to be not only in NVIDIA's Blackwell GPU, but in their like supercomputer, retail at home supercomputer project digits. So the success of NVIDIA is going to directly trickle down into Micron. And again, these Micron's HBM chips and the other ones, other players are sold out. So that means the demand is insane, right? Hot commodity right now. And the other player, so the market leader, let me pull it up. The market leader in HBM memory chips is SK Hynix, which is a South Korean company, but I don't think you can buy it on American brokers. So anyway, Micron, I think, is in a better position for upside and growth. You also have Samsung, but they've actually been dropping the ball apparently. And they didn't pass like NVIDIA's certification. So Samsung is getting left out of NVIDIA's Blackwell chips from what I understand, and Micron is in. So to me, what that signals is Micron is going to probably surpass Samsung and also take market share from SK Hynix. I'm not saying it's going to be a lot, but Micron is going to, it's just like the stars have aligned amongst many other things that I'll cover in my like standalone Micron bull case video. It's just in a great position. The growth that they're seeing from this HBM segment that they didn't even expect, right? That's not their core business. Like HBM is not their core business, but they just, in their latest earnings, they said their core business is slowing down because it's cyclical. The memory business probably is cyclical, but the HBM demand is up so much that they literally said in their earnings, they expect several billions of dollars of revenue in 2025. So the HBM segment in their business in 2024 made the revenue was 700 million. So now they're saying, hey, next year we're gonna go from 700 million in this segment. It's gonna boost us up to several billion just for that one HBM segment, right? So it's like this accidental hot in demand commodity of HBM chips that is gonna give them this incredible boost. And I don't think the price reflects that yet, especially not like 5 years from now, where if AI spending gets as crazy as I think it will, I don't see how Micron won't benefit, along with many of these other companies I mentioned. So that's why I call it the sleeper stock. It's not the market leader in HBM, but it's like an unexpected detour of like, oh, HBM is in crazy hot demand. They just built a new factory in Singapore specifically for HBM production. They're going to ramp up. They're sold out for 2 years. Doesn't mean they're not going to make like sold out means they know they're going to make X amount of billions in the next 2 years. Like the orders are already there. They just have to fulfill them in the next 2 years. So mainly from NVIDIA, I'm guessing that's like one of their major customers. So yeah, if you want that Micron bull case standalone video, let me know in the comments and I'll get that out. I can't wait to. So let's kind of summarize everything that I just mumbled about for however long we've been on. So if I had to take my top picks for, the AI arms race, the safest, let's start there. The safest would be Cadence, Synopsys, and ASML. They're the three monopolies You could throw Taiwan Semiconductor in there, but it's already like closing in on a $1 trillion company. So I'm not saying it can't go to 2-3 trillion, but these are, I'm not looking at as upside potential. I'm looking at as like safe bets. And I don't own any of them, like full disclosure, yet. That could change. I've been scoping out ASML because they are like a standalone monopoly. And I just really like how that sounds. Like you just need ASML. There's no way around it. Those machines are just one of a kind. And then my upside pick is probably going to be Micron, which is, and by upside, right, let's get expectations out the way. So this is a long-term play for me. Micron, I'm looking to hold for the next probably 2 to 4 to 5 years. I'm not sure, depending if the price goes crazy in like year 2, and I think it's, you know, it's not justified, maybe I'll trim it or sell it. But for Micron right now, it's at like 100 billion, 100 something billion market cap. I think 110 billion or 109. My expectations are probably like anywhere from a 2 to 4x in the next 5 years. Could happen in year 2, could happen in year 3, could happen in year 5. I don't know. But I do know I can go in it with size, right? A sizable amount. And if it can 2, 3, 4x in the next 2, 3, 4, 5 years, I'm going to be very happy, right? So I think I'm not saying I'm going all in on Micron, of course, but I'm more than happy to take that bet with, I don't know, let's say 5, 10% of my portfolio. Maybe even, I say that now, but it could end up being like 15%. We'll see. So as far as upside, that's my pick just because, and you'll see when the video comes out, right? My Micron bull case, you'll see exactly why. That's my pick for upside. Fundamentally, the most impressive, I chose Digital Realty because their latest earnings are just bananas. Breaking their data center bookings are just breaking every one of their records by more than 2x. Their backlog is crazy. So as far as real estate goes, that's probably a good bet. And then Powell, which they do provide power solutions, like we talked about. 2 data centers, that's one of their segments. It's not their core business, but fundamentally, they're very sound. So fundamentally impressive. These 2, upside, Micron, safest, these 3 monopolies. Now, let's go back to just really quick to all of these. So there's AMD, NVIDIA. Those are probably, I would say AMD is probably a decent pick for the next 5 years as well. I didn't really cover it that much. I mean, we only have so much time. Let's see what else is on here that I didn't cover. Vertiv, Micron, that's cooling. Yeah, I covered almost all these. So just remember this, right? When you're thinking about the AI arms race, remember that it's way bigger than the moon landing space race in the 60s and 70s, way bigger. That should put things into perspective. And I don't think it's slowing down. So one more thing I'm going to pull up for you guys. Let me find it. This one right here. Supply chain signals indicate Blackwell, which is NVIDIA's new chip, new product, indicate Blackwell's sales will likely far exceed NVIDIA's GPU sales from 2023 and 2024 combined. So I'm not sure if this person means, or this source means in 2025, the GPU sales are going to exceed the last 2 years combined. That's what it sounds like. I wouldn't be surprised. Like just Meta, Elon for XAI. Like I think Elon is buying 100,000 GPUs from NVIDIA just himself, which is an insane amount. And everybody's ramping up, probably 2 to 3xing their spending budgets for 2025 as far as AI goes. So honestly, it's just like all this money is just flowing in. It's going to be raining money in the data center. And for every product and service that lives in a data center, it's going to be raining money. So I also saw another interesting stat today that I shared with my Discord, and I'm going to try to find it really quick. Here it is. Okay, so again, come join us at 444 Capital. We love to nerd out about stuff like this. Okay, this is a tweet I found. PwC predicts that global semiconductor revenues will grow at more than twice the rate of global GDP, exceeding $1 trillion by 2030. And he tagged, guess what stock he tagged? Micron. So yeah, by 2030, $1 trillion space, just semiconductors alone. I don't doubt it. That might even be conservative. I don't know. I just know that this is way bigger than the space race. The AI arms race has exponentially more ROI, return on investment, than putting a man on the moon. Like, I'm not really sure what that did for us, like putting a man on the moon. I'm sure some cool things were invented in the process, but like there was no ROI in that. That was more of like a ego thing between two countries. So very bullish on the AI arms race, very bullish on data centers, because again, that's like the powerhouse of AI, right? Mitochondria is the powerhouse of the cell. Data centers are the powerhouse of artificial intelligence and everything that goes with it. So with that being said, I hope you guys join us in 444 Capital. I'll put the link down below. Amazing community. You get access to, like I said, my research vaults. We do a weekly class. We have hangouts. Give us a try. And that is it. If you have any questions in the comments and you want my standalone video for my bull case for Micron, the stock I started accumulating, let me know, because I'm going to drop that ASAP, probably in a week. So that is it. Hopefully the no edit raw take kind of didn't deter you guys away, but there's just too much good information. I want to spend time editing. I want to get this out to the world and just, yeah, let's rock from there. I'll see you guys in the next video.